Every move Elon Musk makes is scrutinised. He's the richest person on the planet, and with that comes the potential to impact financial markets with a single tweet. He's created some controversy within the cryptocurrency space over the years, but has most recently discussed the impending recession, its impact on businesses, and has slashed the price of Tesla's cars in China. It has been reported by Bloomberg that the value of the dollar is at a point that has historically led to a global financial crisis, and Elon Musk has made some more controversial comments on the impending recession. Back in May this year, Elon said, "It's been raining money on fools for too long." And just last week, he said, "Recessions do have a silver lining in that companies that shouldn't exist stop existing." This created some tensions coming from the richest man on earth, whose companies have received loans and tax breaks to stay afloat. Taking a look back at 2004, Elon Musk bought his majority stake in Tesla for $6.5 million. And in 2008, during the global financial crisis, the company began selling their product, the Roadster. They sold a small 2,450 units globally for $80,000 each, which caused some to lose faith in Elon's vision of making electric cars the norm. But a year later, Tesla received a $465 million loan as part of a federal stimulus package. This is what allowed the company to develop and manufacture the Model S back in 2013. This model is ranked best in class in every category for electric sedans. The car received a near perfect score of 99 out of 100 from Consumer Reports, which also named it as the best car ever tested. And by September 2014, it hit all-time sales records in the US, with 2,500 sold in just 1 month. The success of this model, amongst other factors, allowed Tesla to pay back their federal stimulus package loan early. The company has also received many tax breaks for electric cars and green vehicles. It has been reported by The Guardian that he further takes advantage of his car's absence of tailpipe emissions by reselling his cache of carbon credits to high carbon emitting rivals under pressure to clean up. At least $517 million since 2015. So, his recent comment that "it's been raining money on fools for too long" has created some tension. Further, from 2010 to 2018, Tesla raised $20 billion in capital, while producing a negative cash flow of $9 billion. And in fact, 2021 was the company's first full year of profitability. And whilst the company's aim of causing less harm to the environment is ethical, some are finding his recent comments quite contradictory. He said, "Companies that are inherently negative cash flow, i.e. value destroyers, need to die so that they can stop consuming resources." This sounds pretty similar to something we heard from Do Kwon in a recent video.
95% are going to die. But there's also entertainment in watching companies die too.
Others may agree with this statement and say that yes, Tesla was producing negative cash flow for many years, but the concept of this company is inherently profitable and not a value destroyer. The reason the company is accepted for tax breaks and loans of huge scale is due to its mission to help the environment and the innovative technology they are developing. Elon Musk has gone on to say that he expects a recession to last until spring 2024. And he said that all the COVID stay-at-home stuff has tricked people into thinking that you don't actually need to work hard. Rude awakening inbound. Meanwhile, in China, Tesla have cut the cost of locally built models by up to 9%. This has come after a decrease in demand following the mortgage boycotts in China and Europe's energy crisis. This partially reverses price increases we saw earlier this year due to rising costs of raw materials and logistics. Some reports suggest that this price cut comes following issues with supply and demand of Tesla's vehicles. Tesla delivered a record 83,135 cars in China last month, but the plant can now produce approximately 1 million cars per year. So these figures need to be sustained, and it looks like the target for the second half of the year aren't going to be met. Delivery times in China have got as short as 1 to 4 weeks for the Model Y and 4 to 8 weeks for the Model 3. And in comparison to 22-week wait times earlier this year, we can see the lack of demand. And all the while, competition is strengthening. This price cut may be a smart move from Tesla to balance their supply and demand issues, but following the price cuts, the stock dropped 7.4%. The stock is down from an all-time high of $407.36 in November last year and currently sits at $222. But Tesla intend to continue with the plan that the company will increase production annually by 50% indefinitely. And Elon has said the company is on track to sell every single Tesla it can produce in this quarter.